Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FedSpacer. So today we are going to be having a very interesting session, focusing on what happened in the markets yesterday in the evening, what to expect, the economic calendar today, and of course we'll be going through technical analysis. So on the technical analysis front, we will be trying to understand what are the emerging market trends, what are the emerging chart patterns, where the opportunities lie, and where the markets might be headed next. So hello, Leonard, and thank you for joining the session. So for everyone who is joining the session, can you say hi on the live comment section? And these will confirm to me that everything is working just fine. So that being said, I would start to begin with a disclaimer that this session does not represent any investment advice. It is not a recommendation to trade. So it's purely educational. So make sure that you take responsibility for all your trading as well as investment decisions. Of course, practice proper risk management. So today being Thursday, the very first day of February, I am hoping that you had a profitable January. And as we get into the second month of the year, hopefully we get to build that bag and get better in trading. So hello, Janos. I can see Kevin, J. Sport, and William. So let's begin by first focusing on what happened yesterday. And this is on the FOMC press conference. So yesterday was a big day in the markets as the US Federal Reserve was making an interesting decision. So remember, this was happening at 10 p.m. and where the Federal Reserve Bank of the US decided to hold interest rates at current level of a range between 5.25% and the upper limit of 5.50%. So later on at 10:30 p.m., there was the Federal Open Market Committee press conference, or the FOMC press conference, which was presented by Fed Chair Jerome Powell, where he discussed the result of the decision they made of 5.5%, but also at the same time, investors already priced in the information. So by the time the meeting was happening, the market was pricing in that the Fed hold interest rates by a probability of about 97.9%. So after the meeting, we saw the probability of the next meeting changing, and that's what we'll be discussing today. So on the meeting, Jerome Powell basically said that inflation has not yet subsided to the target level of 2%. Inflationary pressure is increasing in many fronts within the US economy, and that is not consistent with the Fed's expectations. So while the market had priced in a potential rate cut in March, the Fed Chair, Jerome Powell, basically discouraged people from having that expectation, mentioning that interest rates might have to stay higher for longer, depending on how the US economy performs. And the realization in the market is that the Fed is willing to, whatever it takes, hold rates higher until inflation gets to 2% target and then stays there for a while. That's the only condition that the Fed will be looking at in order to make a decision on cutting interest rates. So as a result, first there was a panic in markets. So when the Fed held interest at 5.5%, there was a big sell-off in the dollar index. But then after the Federal Open Market Committee press conference, we saw the dollar making an impressive recovery, erasing all the losses. And today it's continuing that trend of bullishness. So as we head on for the day, there's quite a number of events that we'll be expecting. So one is a meeting that just started, and in this case, we'll be focusing on the ECB President Lagarde. She's due to participate in a panel discussion titled Interconnectedness and Increasing Capital Flows at the Saudi Arabian Monetary Authority's workshop in Riyadh. So currently, investors are following up on that information. So whenever you see such an event, you can click on this section here. You get the latest release. Then from there, you find a link to the live event. So Christine Lagarde, this was on 4th December. You should be able to find something new. on what's happening today. You can't find it here. Then we go to the event directory by searching the title of the event on Google. So we can search this. Hopefully it works. Still not present here. I don't know why it hasn't been broadcasted yet. But then we can also check on YouTube. So still, we don't have anything. It seems like she hasn't started her presentation yet. So on we go with the economic calendar as we cover other events that are expected for the day. Of course, that's not the most important event. So early in the morning, we had two events representing manufacturing PMI for both Japan and China, which came in exactly as expected and the same as the previous level. So for Japan, it was still at 48, still within contraction levels. But then for China, it had improved to expansion levels at 58. So as we move on with the day, looking at the European Manufacturing Index or Manufacturing PMI, this will be released at 12 p.m. Then for the UK, we get the data at 12:30 p.m. So at 1 p.m., during around lunch hour, this is when we'll be getting the core CPI flash estimate for the Eurozone, a measure of inflation in the Eurozone. Then the OPEC JMMC meetings continue all day, where we may expect the OPEC potentially cut oil production output. And that will be an interesting development in markets if it happens. Then we will be looking at the most important news for the day, which is the Bank of England interest rate decision. The Bank of England hiked interest rates 5.5% in the last 2 years. And now, out of investors are expecting the Bank of England will hold interest rates at the current level of 5.25%. So if it so happens that the Bank of England holds interest rates at the current level of 5.25%, that will not be a big surprise. It's a key trend and it's something that is largely expected in markets. And we can easily assume that this has already been priced in. However, 30 minutes later, which will be at 3:30 p.m., we will get a speech from Bank of England Governor Andrew Bailey. And this will shed light on the potential future of interest rate decisions. So it will be a key guidance on the monetary policy of the UK, and a lot of investors will be following this closely. So when this happens, a lot of investors have quite a number of questions. One is, when the Bank of England start cutting interest rates? So that's the question that investors will be asking themselves during the meeting. The second question is, what are the conditions to achieve such an outcome? So what is the Bank of England considering for making a decision on interest rates? So once we get the answer to those questions, then that will determine the direction of the pound pairs, as well as the UK stock market index, which is the FTSE 100 index or the UK 100. So that's the most anticipated news for the day. Of course, if the Bank of England indicates a potential of cutting interest rates early, let's say in the March meeting, then as a result, we should be expecting the pound to weaken against other currencies. But then if we happen to see the Bank of England being reserved about cutting interest rates, then in that case, we might consider a very strong pound, which would work well with other weaker currencies. Later on in the afternoon at 6 p.m., we'll be looking at the ISM manufacturing PMI. Apologies for that. Hello. All right, I'm back. Thank you for your patience. So let's continue with the presentation. So on the next part, we look at the US data coming in at 6 p.m. And this is the ISM manufacturing PMI for the US, as well as manufacturing prices. So manufacturing PMI is expected to slightly reduce to 47.4 from the previous reading, to 47.2 from the previous reading of 47.4. So there's overall expectation that manufacturing is beginning to contract with the US. Then the outcome or the actual data is what we'll be comparing with the expectation. So stronger manufacturing tends to be positive, especially for the Dow Jones index. But then weaker manufacturing is expected negative, especially for the Dow Jones index. So later on, we'll be getting data from the US on natural gas storage. So in the previous reading, there was a reduction by 326 billion, and this should be in liters. And we're expecting a further drop to negative 202 billion. But then the outcome will be compared with this expectation. And of course, we know that if the storage is reducing or if the inventories are reducing, then there is a scarcity which is bullish for prices. But then if there's a huge improvement, then we should be seeing a weakness in natural gas prices. So of course, tomorrow is the non-farm payrolls day. This is when we will be expecting to see the US non-farm payrolls report. And of course, we will be having another market snapshot episode at 11 a.m., which will be presented by Samson Zera. So in this case, there is no need to hurry. Just be patient and attend tomorrow's 11 a.m. event. So besides that, I believe we have a new episode of the British Banter podcast. So if you open the FX Pesa YouTube channel, then you go to podcasts. Then from here, you should see the most recent episode of the British Banter podcast. Sorry for that. Sorry for that. So the most recent episode is the big news for Netflix. So we took a deep dive, myself and Jesse Obola, is the co-host of the podcast. So we took a deep dive into Netflix, trying to understand the various dynamics impacting the stock, the fundamentals about the stock, the market, competition in the industry, and the projections for Netflix for the rest of the year. So if you are interested in investing in stocks, then this is one of the stocks that you might consider adding into your watch list. So adding to your watch list doesn't mean buying or selling. It means that it's a stock of interest that you might be interested in looking into. And once you do your own independent research, if it works for you, then you might consider going for it. If it doesn't work, then you can shelve it and remove it from your watch list. So it's a one-of-a-kind podcast episode, which basically goes deeper to try and understand the fundamental reasoning behind why a lot of analysts are saying buy, others are saying sell, others are saying hold. So once you go through this, hopefully you will be more informed about the stock. So that being mentioned, I think it's time. We also look at the top earnings yesterday. So one of the top earnings that you might be interested in checking out is a Qualcomm company. So Qualcomm is the world's leading wireless technology innovator and the driving force behind the development, launch, and expansion of 5G devices. So the company reported earnings of $2.75 per share, and this was better than expected. The expectation was much lower at $2.45 per share. And these earnings came from a revenue of $9.94 billion, and this was also better than expected. The consensus estimates were at $9.51 billion. So the company said it expects a second quarter non-GAAP earnings of $2.20 to $2.40. This is a range of between 2.2 and 2.4. So it's also expecting a revenue of between $8.9 billion to $9.7 billion. So the consensus estimates earnings estimate is $2.25 per share on a revenue of $9.29 billion for the quarter ending March 31st, 2024. So that's one of the interesting stocks that reported earnings yesterday. So you might want to consider that stock, dig deep to understand its fundamentals and see if it's something that might be working for you. So that being mentioned, now we can get into the technical analysis and try to understand what's currently happening in various stocks. Various currencies. So the first things to observe is the diamond pattern that was being formed on the dollar index. Of course, from the diamond pattern, you can see that the overall estimated direction could be somewhere along these lines. This is just an estimate, meaning that the dollar index has been going sideways with a slight inclination to the upper side. Yesterday, after the announcement of the interest rate decision by the Fed, there was a big jump downwards, upwards. The market settled here and then went ahead to recover all the losses it had made in the afternoon. And then today, we are seeing after market open, there was a slight drop, and then the dollar index accelerated, and now it's about to break into a new high that we have not seen since the month of December. So with the dollar index being this strong, which means that the market are processing Fed Chair Jerome Powell's comments that interest rates might stay higher for longer, then the strength of the dollar index is being reflected in other currency pairs. For instance, if you look at the USD JPY, then you can see an attempt to make a recovery yesterday in the evening. Then today the market is quite struggling, but the overall bias is that there is a good chance the dollar continues gaining against the Japanese yen. So the target level seems likely to fall on the upper trend line here, where the market has been trading in this bearish momentum flag. So in this case, the channel might indicate that the market is pushing higher and might get to this upper trend line. So for Euro USD, there has been a consistent bearish push. And this morning, we managed to break a major support level. So this support level was holding for quite a number of days. So from this area here to this area, and now in the last 2 hours, we have had a clean break, indicating that there is a good likelihood that the euro continues losing to the dollar. So for the pound USD, we have had a very strong bearish momentum as the pound continues losing around the dollar. Right now, it's testing a very important key price level, and this is a major support level that has been holding for a while now. So the support held here, and then at this junction, and then this area, and now the market is looking to cruise through that. So if the market breaks below this area and keeps going downwards, then there's this major trend line that has been holding, and this is since November last year. And if this level is broken, then we'll be looking at a couple of more levels, especially this area here, which was acting as support. This is 1.261. So there is a good chance we could be seeing the price dropping further downwards and getting to the 1.261 price level. So we can adjust this to what? The previous low. So the previous low is all the way at the end here. So 1.25939 is also a target. Then what comes first is the immediate support level that might lie along this area. So as for USD CAD, we had a strong bounce on the forward chart. You can see the strong pin bar that was formed here. The market reversed and has been going upwards since. So on the 1 hour chart, you can see that the market is currently testing a bigger resistance level. And if we happen to break this area, then the idea is now to target an even higher price as the dollar recovers against the Canadian dollar. So we could be seeing the market going for 1.35352. So gold seems a little bit noisy to me. So despite the big jump yesterday and then erasing all the gains, moving downwards, then today early in the morning, higher, then lower, seems more like a very noisy market to me. So I would be a little bit patient and then wait to trade only on the edges. And I believe the edges that we will be looking to trade are somewhere along this line. So on the 15-minute chart, you can see the support here a second time, a third time. And now as gold continues pushing downwards, then it's a potential play. Wait for the market to get here and then try to squeeze in a position if you see evidence of market bouncing from this area and now moving on to higher price levels. So for AUD-USD, we are on the verge of breaking a major support level. We don't know whether the market will break or not. So this one commands some patience. Wait and see kind of approach after the market broke out of this range. So it's a range that we have been talking about for the last couple of weeks, where the market was simply just trading sideways. But then after breaking this area, we have seen a direct drop to the previous support level. And now as the market gets to this point, if you had a short selling position, this is the area to exit. But then we observe this price level to see whether the market bounces and gets back higher, or whether there will be some further downside momentum. So US equity indices opened with a gap on Monday, and this is the Nasdaq 100. On Wednesday. So kept going downwards yesterday, especially after the announcement of the interstate decision. But then to see today, we are seeing a very strong bullish momentum, indicating a reversal of prices, and perhaps this is the area to look for long positions. So remember, in a very strong bull market, whenever there's a pullback, it's often an opportunity to buy even lower prices. So if I was to zoom this one out for a while, then you can see that anytime we have had such a bearish momentum, the market has responded with strong bullish momentum. So bearish momentum, market responds with strong bullish momentum, and I expect this to be the case for the Nasdaq going forward. So the US 30 is also attempting some form of recovery, same as the S&P 500. So over the next week, we should be expecting to see a strong recovery coming in from the top equity indices. So UK oil is making a big sell-off. So in this case, as I mentioned, I was pretty bullish on oil. So as the market was moving downwards, we were looking for this area as a potential buy point. It didn't play out at midnight, and now the market is further pushing downwards. So we remain patient and wait for the real opportunity, go for a bullish position. So for now, we just wait until we have signs of bullish entry. So we don't have signs of bullish entry. So in this case, so far, just be patient and wait for the opportunity. So European equity indices, beginning with the French 40 index, are indicating some signs of recovery on the current hour. So if you look at the current 1 hour candlestick, you can see that the market is really struggling to get back up. And if the market closes at this point or even higher, then there's a small likelihood that the market will continue and regain all the losses it made yesterday. So this is a playable opportunity. The same case applies to the Euro 50 cash index. Of course, the UK 100 index. So for the UK 100 index, as we have already mentioned, there is a big news coming up, and that is the Bank of England interstate decision. So in this case, you might have to be a little bit careful because the news increases the chances of volatility, and as a result, the risk in the potential position. So as for Bitcoin, we saw the market breaking above this trend line, moving further back downwards, up, and then back downwards. And what we are seeing here is a key development where what looks as the new support in this market keeps playing out, and we see some further upside happening in Bitcoin prices. So New Zealand USD attempted to break towards the upper side, failed, and now is moving further back downwards. So after all this momentum upwards, then you can see the market fading to rally above that. And now what we have here is a market that has broken the lower trend line. And now the new target is the base of the pattern here, price level of 0.60629. So US oil, same as Brent oil. So USD trading against the Swiss franc made an important recovery yesterday. So as we speak today, you can see that the market is testing a major resistance level, which it seems to have failed to break. And now we are seeing some form of reversal. So it basically means that for this period, the market has just been trading sideways. So we are seeing a market that is just moving sideways, save for yesterday's momentum. So the market is still in a range. So I wouldn't be looking for a major opportunity from this until there's a clearer market direction. So lastly, for pound yen traders, we know that the yen is currently very strong this morning. And this has led to a big sell-off on the pound yen. But then as we approach the news that we will be expecting later in the day, which is the Bank of England interest rate decision, if it happens to strengthen the pound, then we could be seeing a potential recovery of the pound against the yen. So this would be a playable idea. And that depends on the price action as well as the outcome of the news. So that's it for the day. So let's see if you guys had any questions. Let's point to the questions as we approach the end. You can see DMW in the house, Willie Bet. Hello, how are you doing? Why it sold instead of buying since it was expected non-change? So this is a question from Martinez, Forex Academy, Zambia. I would like to respond by saying that when the Federal Reserve Bank of the US decided to hold interest rates at the current level of 5.5%, the market was already pricing that. So we had already discussed this earlier in the session on the market snapshot. That was presented by Norbert Kieser. So the market having priced that there was a possibility of 97.9%, the Fed holding rates, it basically meant one thing. We didn't expect any changes. The information was priced in, so the market was in an environment that we basically described buy the rumor and sell the news. So a lot of investors had bought the rumor that the dollar will eventually strengthen as a result of the news. So when it was confirmed, they sold as the late investors went for their buy positions, and we saw prices dropping. But then after the FOMC press conference, you saw the market making a strong recovery. So if you're a person who specializes on trading FOMC news, I always advise people to be patient and wait until you listen to the FOMC press conference and the questions. So I have a question. I have a question on FOMC yesterday on the CMG. It was saying no change. Even December FOMC is saying the same thing, no change. But December FOMC bought and this one sold. What was the reason why? It really depends on the data coming from the economy. So in December, the US had a couple of promising news that were indicating inflation was moving in the right direction. And we saw the potential that inflation rates would continue dropping and get to the 2% target. But then today, the data we are seeing in the US economy is not very confident about rate cuts, especially when you look at inflation, which came in at 3.4%. Jumping from 3.1 to 3.4% is not consistent with the Fed. And now the expectation in the market is based on that data and the discussion from the Fed indicating the health of the US economy and where things might be headed. So, hello, Joe. I can see Nixon, Casapelli, Moses, Jace Code, and Manabasto. So thank you very much, guys. Thank you for joining, and I hope to see you on the next session. Make sure to listen to the latest episode of the Bullish Panther podcast and enjoy the rest of your day.